What's going on, everybody? My name is Q, and today I'm going to guide you on how to navigate the market for the week ahead, starting with SPY, which is the S&P 500 ETF, and then moving on to other stocks such as Tesla, Apple, Amazon, AMD, Nvidia, and Meta. We're going to talk about these charts on the macro and the micro term timeframes. That way you know exactly what critical levels to watch on the short term and the long term charts. So let's go ahead and get started, but before we talk about our charts, let's go ahead and talk about some things that happened last week and some things that are happening this week that could potentially send markets higher or force them to pull back. The most important thing that happened last week were earnings from companies such as Meta, Apple, and Amazon. The reason why this was so important is because many of these stocks were already trading near or at their all-time highs, and so it was very important for these companies to meet expectations in order for markets to justify the current valuation that they're trading at. Of course, all three companies did beat earnings. You can see that Meta beat earnings, although earnings expectations were already very high, and that was the same case for Apple, and of course the same case for Amazon. Meta had the strongest stock reaction, and we'll talk about its levels in just a little bit, and that was primarily because the company had very strong guidance and they had grown all 4 quarters very significantly. Now, unlike last week, this week does not have many important economic reports, but we do have a ton of Federal Reserve speakers. Every single day you can see that there are Federal Reserve speakers that are booked to speak, so keep that in mind when you are positioning yourself. Anytime that the Fed speak, the market tends to get a little uncertain, and so we may see some unexpected movement throughout the day depending on the comments that the Federal Reserve speakers make. So now that we've talked about what happened last week and some things that are happening this week, let's talk about our charts. First and foremost, let's go ahead and talk about SPY on the daily time frame, where you can see that SPY accomplished another all-time high but fell just short of that 500 target that many people have been waiting for. Now, just a couple weeks ago, or actually just last week, SPY already moved to an all-time high, but you can see that it got rejected and moved back down significantly right after. And the reason that was is because on this breakout, you can see that volume was very lacking. There wasn't much volume or aggression from the buyers to force that move higher. But compared to this Friday's breakout, which was just the most recent breakout, you can see that SPY did indeed accomplish that breakout, and it was accompanied with very strong volume, suggesting that buyers are likely to continue this move. Now, one thing that you want to be aware of, though, is that we are making this move very close to the beginning of the month. We can see that it's just February 4th right now. And if this move does not hold, we could be looking at a pullback from SPY throughout February. February, historically, for the last 30 years, has been the third worst month for the S&P 500. And the fact that we're entering this month at a new high could be alarming because this could be a trap before we start pulling back. And so if you are looking at SPY and you need some guidance, of course, the first thing you want to look at on the daily time frame is where did SPY close above or below the 10 and 20-day moving averages. So every single day, at the start and the end of every single day, you should be looking at where SPY closes. And if it closes below the 10 or the 20-day moving averages, again, for the third time within the last few weeks, it is likely going to force a move back towards 471, and that is looking at the longer term time frame. If you are looking at the shorter term time frame and you just want to focus on the day-to-day, you have very close supports that you can focus on and close resistances. Of course, the main and strongest resistance in the way is going to be 496.05, and the reason why that is because that was the highest point SPY reached last week before getting rejected. And so coming into this week, buyers are going to need a breakout above that level in order for them to move SPY towards 500. But keep in mind that an early week breakout above 496.05 could be alarming because it could also be a trap before SPY pulls back. And so when it breaks 496.05, you need SPY to stay above that level in order for buyers to continue having confidence. If it can't stay above that level, then buyers may start taking profits from these highs and pull markets back. Now to the downside, you have a support at 489.20, but even if it breaks below that level, we are still bullish on SPY. The only time we would turn our bias on it is going to be if it breaks below 482.80, and then if it breaks below 476.95, that's when we would start considering a put or a short position as a swing trade. We are more than open to day trading puts on SPY or calls, but in order for us to swing anything against the market, we would need SPY to close below 476.95, and the target below that would be 469.70. And again, make sure you're checking back in because we will be updating these levels for you in the coming videos. So now let's talk about some other stocks that are important on the market, starting with Tesla. Tesla has not caught a break lately. Ever since it tried this breakout above 260, you can see that the stock has been selling off. And throughout the entire time, the stock has been trading below its 10, 20. In fact, it's trading below all of its healthy moving averages. But most importantly, it's trading below the 10 and the 20-day moving averages, which are the blue and the purple lines. And so if you are looking at Tesla, the first thing you should be doing at the start of every day and at the end of every day is seeing where did that daily candle close in comparison to the 10 and 20-day moving averages. If buyers can manage to break it back above the 10-day moving average, then that level will become a support and Tesla could ride it all the way as it did here. It could ride it back up towards the 200 plus level. But if you're not focused on the longer term charts and you want to look at the shorter term time frame, let's go ahead and talk about some things to watch for Tesla. Now, of course, Tesla is suffering from a post-earnings power earnings gap down. And so this is a very crucial point for them. If buyers can't get Tesla back to fill this gap very quickly, then it's likely going to continue selling off. Our main support and focus is going to be 178.40. If Tesla breaks below that level, we do see it falling towards 163 to 164. Now, if Tesla can manage to break back above 196.50 this week, then we do see a 205 to 207 price target in sway, and then we will update levels in our next video in terms of where it's at that time. The next stock on our watch list is going to be Apple, which actually did not have a very good earnings move like Meta or Amazon. Amazon and Meta gapped up on earnings, but Apple actually stayed flat. You can see that it gapped down and buyers were quick to buy that gap, but we still don't really trust it, and that's because investors are a little uncertain right now because Apple's iPhone sales are slowing down, and so they're just not really sure what to make of it right now. Now, in terms of Apple on the daily chart, you can see that the stock is below its 10 and 20-day moving averages. So until it moves back above those points, including the 50-day moving average, which is this yellow line, buyers are going to be a little skeptical. Once it moves back above those points, then buyers are going to feel a little more confident. So let's go ahead and talk about Apple on the shorter term time frame to see what levels to focus on. If you are looking at Apple on the hourly time frame, your main support is going to be 179.10. You can see that Apple has bounced to that support once, twice, and 3 times. That means this support is either a triple bottom support, or if it breaks below that level, then it's going to very sharply move down towards 173. And the target below 173 is going to be right around 165. Resistance to focus on for Apple is going to be 191.80. Above that level is when we would start trusting it again, and lo and behold, of course, above that level, it also puts it back above the 10, the 20, and the 50-day moving averages, which is where buyers will restore most confidence. And so if Apple breaks above 191.80, we do see a price target of around 196 to 197 to start. The next stock on our watch list is going to be Amazon, which had a phenomenal breakout on earnings. Let's go ahead and talk about Amazon on the shorter term time frame. Amazon obviously experienced what's called a power earnings gap up. That's when a stock gaps up on earnings and holds the gap up. And so as long as Amazon holds the gap up, then we are very bullish on it. Notice that we don't even have any red for Amazon. That's just because we simply would not bet against the stock right now. The most important support that Amazon can hold is going to be the 162 level. And the reason why is because that's the level that Amazon had been struggling at before it finally gapped up above it on earnings. So that means as long as Amazon stays above this level, which is around 162, then buyers are going to assume that this breakout is holding and it will continue moving higher over the next few weeks or few months. For Amazon, you do also have another support at 166.60. Now, this is the support that we would like to see it hold in order for it to continue in the short term. So if you're looking for Amazon's continuation in the next 2 to 3 weeks, you definitely want it to stay above 166.60. But if you're just looking for continuation over the next few months, then it can afford to come down to 162, retest 162, and bounce back. Now, for continuation to the upside, Amazon is going to need to break above 174.50, and these are going to be the upside price targets to focus on. The next stock on our watch list is going to be AMD, which moved back above its 10-day moving average. So see how the 10 and the 20-day moving averages on the daily chart have been acting as such a strong support for AMD throughout this entire rally. Every time it's come down to those levels, AMD has managed to bounce higher and make a new high. And so that is a very impressive move. The fact that it recovered above the 10-day moving average last week means that buyers are trying to take control again. So every day you should be checking AMD on the open and the close. Where did the daily candle open? As long as it's above that 10-day moving average, then buyers are controlling the short term, and they are likely going to force it to retest 184.92. Let's go ahead and talk about AMD's short-term charts. 184.92 is their all-time highs, and that's the place where they got rejected significantly, which makes that the point to focus on in terms of a breakout this week. You need to move above that level in order for AMD to move towards a blue sky breakout, and our price target would be close to 190 to start. Remember that we derive our price targets from previous resistance points, and if a stock is trading at an all-time high, there is no previous resistance point. Therefore, we just have to gauge our price target based on momentum and volume. So to the downside, AMD is still considered bullish as long as it holds 172, but if it breaks below 172, then we would turn our bias a little more bearish and we would consider swinging puts if it closes below 162.50. The next stock on our watch list is going to be Nvidia, which moved to another all-time high. A little sinister on our end because the stock closed or got rejected right at 666, which is obviously a very superstitious number for many people. And so if you are looking at Nvidia on the longer term time frame, which is the daily time frame, you can clearly see that Nvidia has been sufficiently using that 10-day moving average so much as a support. In fact, if you caught the pullback to that 10-day moving average earlier in the week last week, then you know that Nvidia would have been a very good buy. We caught this move in our group and we enjoyed calls for the next day. If you are looking at Nvidia on the shorter term time frame, here are some levels to focus on. Of course, that 666 number is going to be the main resistance and focus. That's because that's where Nvidia got rejected before pulling back. To the downside, you have a support at 653.85 and another support at 636.85. Notice we also do not have any red for Nvidia, and that's because we simply will not bet against this stock. We have been buying dips, we have been longing rallies. This is not a stock to bet against. We do expect the Nvidia rally to continue going. We are up more than 40% on our shares ever since our entry last year, and so we are happy to keep them, and we will stay long the stock until we feel like it's time to sell. Last but not least, and the biggest winner last week, it gained $80 on Friday, was Meta. And you can see that Meta moved to another all-time high after beating earnings significantly. Analysts were very optimistic about these earnings, and Meta managed to beat them. And so that means people are still very optimistic on Meta, and it is likely going to continue going as long as it holds the power earnings gap. Remember, we talked about the power earnings gap from our earlier setup on Amazon. Same exact thing here with Meta. We want to see Meta hold this power earnings gap. We don't want to see it fill it back in. And for it to continue moving higher, Meta needs to break above 496 in order for it to push to that 500 level. Now, if Meta does pull back, we will remain bullish on Meta as long as it holds 453. But even if it breaks below 453, we are willing to give it some breathing room. Notice Meta is also one of the stocks that doesn't have any red, and that's because we are simply not willing to bet against this stock right now. It is simply too strong of a stock to bet against and is likely going to continue moving higher. So we would rather enter on pullbacks rather than try to play them. So that wraps up our overview of the market for the week ahead. I hope you guys found this video helpful. Don't forget to subscribe and like.